Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. So far, the Australian dollar and many other currencies remain strong against a weaker US dollar, following the latest signals that inflation is easing its hold on the US economy, following the lower than expected Consumer Price Index, or the CPI data, which came in at 3% in June and down from 4% in May. The softer data may now give hopes that the US inflation is cooling enough to get the US Federal Reserve soon to end its aggressive run of hikes to interest rates, and may only raise interest rates now once to the end of the year, that is of 25 basis points. Meanwhile, growth in the US producer prices, that is the PPI, also eased more than expected in June in the latest sign of fading inflationary pressures. After data from the US Bureau of Labor Statistics, or the BLS, the PPI for the month eased to 0.1% annually, decelerating from a downward revised mark of 0.9% in May. With the bruised US dollar continuing its bearish trek for the sixth consecutive day, now holds around 99.46. And as we look at the Australian dollar, the topside target of 69 cents has been reached and respected. With the overbought conditions, does warrant a pullback. Maybe see towards 68.45 and reassess. If that fails to hold, then we could see a little bit more of a correction back towards 67.80. But that being said, with the US dollar remaining somewhat negative and looking towards a target of around 97.5, as it currently trades, as I mentioned, at 99.46, may find that the pullback will be shallow. The euro not too far away from its objective of 112.4060. Reassess from there, as the market is extremely overbought and therefore does warrant a pullback as well, but could be also shallow to the support area around 111.75. But as I mentioned, if we find a little bit more of a correction due to this extended run that we've seen, and the dollar can bounce, then we may see a pullback to 111.35. The bearishness for dollar yen is now at its target, or close to, seen at 137.1525. Now a break here would give further scope to the downside and bring in a target around 134.5. I know there's a big call, but the market, the way it's falling, seems that profit taking or people getting out of their long positions rather quickly, and therefore may see an acceleration of stop losses if we do take out the level of 137.1525. So do keep an eye on that level. The pound, after clearing 130, is now on track to look to the next target, seen at 132.15, and reassess from there. Although the call is a little bit slim due to the fact that we are overbought, and therefore does warrant a pullback to at least 130.30. The upside challenges, well, the market for gold didn't clear that level of 1,964 to 66. I'm now keeping an eye on this current pattern, as the recent gains I've not been supportive, as you may well know, and I still feel that gold is somewhat overbought in terms of the fact that the RSI is extremely high and therefore warrants a pullback to around 1,946 and reassess. Wrapping up with oil, the market keeps to its bullishness as it rallies on and then getting on towards the close target, that is, of $78. Reassess from there, as the market may find a little bit of overbought conditions and therefore could see a pullback from $78 to around 75.5 and reassess. The trend, however, holds around 74.40.50. That's a wrap for the week. Thank you very much for joining me. And as always, look out for the interest rate report. I hope you enjoy the great start to the new weekend.